Hello everyone and welcome into the channel. My name is Brent and in today's video we are going to be doing our M1 Finance weekly recap from the 27th to the 31st of March 2023. We are going to go ahead and take a look at the overall performance of our portfolio, what stocks are up, what stocks are down overall from the very get-go of the portfolio. We're going to take a look at the 1 week performance. So on a weekly basis, what positions were positive, what positions were negative, how did our portfolio do in comparison to the S&P 500 along with the other main indexes. Last week was just an insane out of the blue performance boost where I saw many of the indexes up over 3%, and we're going to see how our portfolio compared. I am not sure, and I haven't checked out my portfolio yet, so we're going to be doing that here in just a few minutes. And then number 3, the activity of the week. I did end up buying last week on Monday. I don't think it included it in my video. While I was editing my video, I did see when I rewatched my video, I saw that there were so many interruptions in my edits. When I edited my video, I think pieces that I wanted to leave in my video had been removed and pieces that I wanted removed were left in. And after I rewatched it, I did have a lot of repeated information there towards the end. And then the whole information as far as like why I'm buying exchange traded funds, I didn't actually include that. I cut out the entire piece there. So we did end up buying into an ETF last week. We're going to go ahead and take a look at what we purchased and any dividends that came in our number 3. Number 4, we're going to take a look at our updated dividend income. Every week we get paid out new dividends. I like to have these dividends reinvested, and this increases our future dividend income. And as those dividends get rolled into the portfolio, reinvested, they continue to add and grow our dividend portfolio. And just really quickly, starting off with the videos, I want to go ahead and include a little bit of information as far as where we are in the market going forward, right? Overall, after hours right now, it's neutral. I honestly do not know right now, are we moving higher? Are we moving lower? I know that there is so much negativity out there, but the market is doing what the market does. And it's unexpected. There's a lot of things in motion right now, not only within the United States, but globally that are happening that just, it would seem would affect the markets, but they're not really affecting the markets. And I think that we should have more red in our future, but that's going to be determined. A few things that I have seen, as we saw, the first quarter of 2023 ended very surprisingly with all indexes up over 3%. And then we actually did see the quarter up about 7%, which is huge, where the majority of 2023, the S&P 500 was in the negative. And then here towards the last bit of quarter one, it just boosted. NASDAQ has been soaring nearly 17%. This is the best quarter since the early fourth quarter of 2020. So it has been quite a while since we've had the NASDAQ outperforming as far as it is. There's still a lot of highlights here, such as bond prices are rising. The Federal Reserve won't raise rates, but I do believe that the Federal Reserve is going to be raising one more time. It was announced that they're supposed to raise 2. I think they're going to raise it one more time, then they're going to not raise it for a while. And if you look at past history, there's always a period where they will not, they'll just leave it as it is. And oil prices ended quarter down, fueled by fears of prolonged stress in financial sector and potential recession. That's that word out there. Another thing that's kind of out there where everything is kind of pushing higher at the start of 2023, as you're reading into many earnings, there's tons of earnings that are going out there. They're very pessimistic about their future. They're saying that inflation has been high, wages have been high. They haven't been able to raise the prices as much to match inflation, so they are losing profits because they're not able to raise the amount that they can. How much? What's the word? How much they can sell you something? They can't raise it to meet the inflation rate. So they're losing money on the back end by not being able to raise the rate or being able to raise the price as much as it should for the individual to be purchasing it. So there's a couple things out there going forward where they believe eventually going forward, this is going to kind of hit them later on, and that's going to drag their earnings down, maybe towards the third, fourth quarter, where they're kind of seeing where now down the line inflation slowing down, but right now it's affecting companies, their money. So another interesting article was the petrodollar. So if you guys haven't been hearing about the BRICS, so it is Brazil, Russia, India, China, and Southern Africa. These are like the BRICS. These are like the highest GDP countries out there in the world right now. And there's also big talks right now between China, Russia, and a few others, how they're going to be dropping the dollar and no longer using it as their sort of currency, real currency. Petrodollar is not really like a currency, but it has been something where the dollars were just being used to trade oil since the early 1970s. The U.S. government provided economic aid to Saudi Arabia, and chief oil producing rival, in exchange for assurances they would price its crude exports exclusively in U.S. dollar. So this was back in the 1970s, and the petrodollar was born. Basically, anytime any country purchased oil, they had to have U.S. dollars. So it was pretty much every country in the world had to convert their currency over to U.S. dollar and then purchase it. So this gave the U.S. dollar a lot of power behind it. But in recent times, there's countries out there that are beginning to trade externally of the dollar, and that is something that has been, U.S. dollar still the world's reserve currency, but its dominance is slipping. So yeah, BRICS right there: Brazil, Russia, India, China, South Africa. I thought this was an interesting article. I still haven't read it all. I'm kind of going down and reading it, but it does have some interesting things, such as we already knew Russia was diversifying away from the dollar, and they're loading up on gold. This started, I think, back in 2020. They just began buying tons and tons of gold, kind of like how the U.S. dollar had been backed by gold in the past. They're kind of going back away, because of the what were they called? Russia got a lot of sanctions put on them. So at that time, a lot of their money got frozen and could not be moved as easily. So they just went around it, and they're finding ways to kind of diversify. And, it's going to be interesting how it affects the markets in the United States in the future. So I do think that's interesting. Some news there. If you guys would like, I'll have these articles posted in the description below these videos. Look for the pinned comment. There will be an article in there. Okay, jumping over into M1 Finance. So we're done with the news. Let's go ahead and take a look at the overall performance of the portfolio. So it has been quite a while since I've seen the portfolio return over 50%. At one point, I do believe the portfolio had been up 77%. It's still not quite at those all-time highs, but overall, it has been doing really well. You can see our market gains are 5,412. Our earned dividends are 4,412. So I believe just a few weeks ago, the market gains had been actually below the earned dividends. So these market gains, they can go up, they can go down, they can go sideways, they can kind of just fluctuate so heavy. But those earned dividends, once I've earned a dividend, I don't ever have to give it up. I can use it as buying power to reinvest into other companies that I believe are, interesting or that are down and beat up. And I think long term, they'd be great investments. I do have auto invest turned on. We'll go ahead and talk about this going in a little bit here. We'll talk about why I turned auto invest on and what I will be auto investing into. Now, our best performers, worst performers, we have Apple as our best performer. That was same as last time. Avi was same as last time at number 2. Lockheed Martin, I believe this is a new one in 3rd place. I believe Main Street Capital had been in 3rd place, but recently pulled back there. They pay out dividends monthly. They've been doing insane in the portfolio. up $617, nearly 98%. I'm not sure if that's 100% positive, but hey, it says it. IIPR is our worst performer, down 55%, but followed right behind, not too far, Digital Realty Trust, down 51.23%. We have Essex Property Trust, down 20% at $168. I feel like these percentages are not correct. This right here is showing down 51%, but I'm down $479 of $2,000 invested. Being down 51% would actually put me down over $1,000. So I don't know how they do their math here, but I believe it's off. This one here, for example, this is more, like, this is correct. I lost $1,044 in a position that had nearly $2,000. This is showing down 55%. I have lost nearly 55% of the equity in that position. So this is more accurate than this one. 20%. I think this is off a little bit as well, but interesting. That is the overall performance. I don't want to spend too much time on there. Our weekly performance. Look at this gain on the week. So yeah, look at that gain. That gain in here, that nearly $1,000 difference came just this 1 week alone, up 3.12%. I don't think we're going to hold it. I'm really hoping that we pull back. Having a 3% gain on a week out of the blue, where nothing really drove it higher, it just seemed odd to me. It really did. Our best performers this week, we had Starbucks up 5.89%, Waste Management up 5.64%, Lowe's up 5.55%, Avery Dennison. Look at all these percentages. They're up nearly 5%. Starbucks, Lowe's, Avery, Essex. Interesting that this is going higher. You know, this is one of our most beat down positions right now in the portfolio. I think it was number 3. It's moving up 5% there on the week. So interesting. JP Morgan in that slot there at 4.32 on the week. Digital Realty Trust, that was in our second worst performer. So it's interesting to see many of these positions just higher on the week. I don't honestly know what the reasoning behind it. The only position that was red this week in the portfolio was Lockheed Martin, down 0.38%. What the heck, Lockheed? Why couldn't you have been red for me, man? So how did our portfolio do in comparison to the main indexes, right? So the S&P 500 this week put on a 3.48% gain. That is huge on the week, ending the year to date up 7.03%. So that is a huge gain there on the year. This past week was insane. I did not expect the S&P 500 to put on a 3.48% gain. Here I was thinking, oh, the S&P 500, it'll probably hit that 50-day moving average, I believe it was, and kind of bounce. And actually, I think it had been trading above that 50-day, 200-day. It was kind of below the 50-day. Let's go look. So S&P 500, the 200-day is 392. It went so quickly here, right? Bursted right through that 200-day. So I was thinking at the very end of Friday, on the 31st of March, that the S&P 500 would have closed probably right below that 50-day. There is no way I would have ever expected the S&P 500 to close at $409.39. This right here came out of the blue, and I actually had to roll my my SPY calls forward. I had them at $400. I rolled them forward a couple weeks to 405. I don't know how many weeks down the line. I believe I have it set for the 17th, the 14th. I believe on the 14th of April is where I have my call strike price at 405. So I don't believe this is going to hold. I'm really hoping it doesn't. If it does pull back below and I am able to close my call options at least 50% in the money, I am going to do that. I honestly don't know what's going to happen going forward. Again, we talked about a lot of the news in the market. I don't know. I didn't expect the market to kind of move this fast, this high. So I'm thinking that here in the short term, we should have another retest because of how fast the S&P 500 put on a gain this week. It just opened up high. It just gapped. It gapped higher. It gapped higher. It gapped higher. We have to refill these gaps. We can't have these gaps just be here. It's got to come back down. It's got to retest this, fill in that gap in. It has to do it manually during the day. You can't just gap up in the middle of the night and expect it to go forward. So I'm really hoping for a pullback. And then I will close my call options, and hopefully at least net positive 50%. Dow Jones put on 3.22% on the week, up year to date by 0.38. The NASDAQ put on a 3.37% gain on the week, year to date up nearly 17% as we saw earlier at 16.77%. Now, our portfolio overall, it has a total value of $46,113.62. At the very beginning of the year, I made a video back on January 3rd, 2023, of where we were at the beginning of 2023. So, where we were was we had $43,601.62 invested. We had $22.94.20 in cash. So a total of $45,895.82. And where are we at now? We're at $46,113.62. So our current difference, we've really only gained year to date 0.47%. So this goes back to investing in indexes. That's a big thing for me right now, is investing back in indexes where I don't have to worry about, did I choose the right company to invest in? IIPR, Digital Realty Trust, Essex Property Trust, a few others out there. I had Stanley Black & Decker, not Stanley Black & Decker. Stanley Black & Decker, SWK. I had that in the portfolio as well. Like, would these positions, are they going to recover? Are they going to recover in time? I honestly do not know with IIPR if it will recover the loss that it has taken. Digital Realty Trust, I believe it will recover in time, but when will that time be? It's really hard to reinvest into these companies because they started off with really great moats. I thought they would be really interesting, but IIPR fell apart as MJ is more easier to come by, federal regulations being a lot slower. MJ can just be grown anywhere. Anybody can kind of grow it. That produces a lot of it, which drags down the price, which affects overall properties being rented or sold and all that. So their business model itself is it's a lot harder than it started off being. So when investing going forward, majority of my positions are going to be ETFs. Announcing that now, I will probably more than likely not be buying individual companies any longer. It's a lot harder to manage, and while I do love investing and having diversity, the ETFs give you that diversity. They give you what you're looking to invest in. If you want to invest in dividends, hey, you have that ETF, Schwab, which is a US dividend equity ETF. It's invested, I forgot how many individual companies in there, but the majority of them are focused on dividend companies, which is what this portfolio is after. It's a dividend base. It's generating dividends inside of a Roth IRA that are not going to be taxed. They're recreating capital within this portfolio that is used to buy more shares within this portfolio, which is raising dividends going forward. And it's an endless cycle. Eventually, when we this is my wife's portfolio. So when she gets to the age of 55, which is nearly another lifetime away, she will be able to have this portfolio completely tax-free, paying her dividends on a monthly basis of maybe a couple $100, maybe a couple $1,000, completely tax-free. This along with other investments, right? So it's just a nice, easy way. And that is why we turned automated investing on, turn Schwab to be 76% of the portfolio as the focus. And now that is our main focus. Until Schwab hits 76% of the portfolio, it's going to continue to buy Schwab 100% of the time. Anytime that we have $25 to invest, which we have $25.76 to invest, the auto invest feature is going to take my capital of $25 and more, and we have one buy available that it's going to do. It is going to, at 6:30 in the morning, automatically buy Schwab. It's going to invest $25.76. I don't have to do anything. That means if I get $25 that comes in the middle of the week, it'll, in the next day, buy more Schwab. If at the very end of the week, I collected $100 in dividends throughout the week, it will have invested on that, dividend growth investing style, DGI, dollar cost averaging style, DCA, into Schwab throughout the week. It'll just continuously do it regardless. Going forward, indefinitely, it'll just buy Schwab. I don't have to worry about it any longer. If I forget one week to buy, this thing will not forget. It'll know automatically to invest, and it's targeted towards that Schwab. So it just makes it a lot easier. I didn't think that was the introduction to number 3, which is our current activity. That's part of our activity of how we're focusing our portfolio now going forward, is how we've changed from an individual investor. I've been invested in individual companies from back in 2013, 2014, and it just wasn't, it was interesting. It was a lot of fun to go out there and do the research, look at companies that I believe are going to be doing and performing better than the S&P 500. And there has been times where I did perform better than the S&P 500, but it required a lot of time being set aside to look for companies that were down and beat up and that I could invest into and outgrow their performance, such as Apple, Merck. The majority of these companies here over the past 5 years, they did outperform the S&P 500. All these companies here, let's see, over the past 5 years that this portfolio has been active, what has been the growth of the S&P 500? Let's see here. We got to look at total return. So the S&P 500 has gained 73.27% with dividends reinvested. The Schwab SCHD has gained 80.56% over the past 5 years. So my portfolio over a 5-year period, if I had just been dollar cost averaging into the S&P 500 or Schwab, this is, you can't really say that your portfolio would have these gains, right? Because this is the performance. If you had invested that amount of money here, you'd be at these points. If you had just dropped, we can do that here. If we dropped, there should be an option down here. Well, there used to be an option. Okay, here it is. If we had invested $10,000 at the beginning 5 years ago, where would it be? But we don't invest at $10,000. I wish this would kind of do like a periodic, like, hey, if you put in $115.23 on a weekly basis, where would you be at? That would be pretty interesting. That's probably some calculator out there you could do it. So you wouldn't have these performances because unless you 100% invested all your capital here, you wouldn't have it because, your dollar cost averaging, you may have similar performances because maybe you bought heavy during the dip or you bought along the way. I don't know how it'll work, but you wouldn't have the exact same performances. But we can see here, there's a couple positions here that are up over 80% or close. We have Cisco, ABM, Main Street, Lockheed, AbbVie, Apple. But if we look at the equity invested into these, so we're going to actually go from the 60s. So we'll say 2, 4, 5, 6, 7, 8, 9 together. 9, 11, 12, 13, 14,000, maybe $14,000 of this portfolio. Well, that's the value now. So less than $14,000 of the capital that I invested into this portfolio has had a return of equal or similar returns versus the S&P 500 or the Schwab ETF fund. That means that over 50% of the equity that I invested into this portfolio has gone into positions that has underperformed the S&P 500 or the Schwab fund. So going forward, I still have time to invest, right? I can fix my portfolio. I don't have to remove positions out of my portfolio right now, but going forward, I can alter the way that I'm investing and I can position my portfolio to target specific ETFs now, and it makes it a lot easier to invest. I feel comfortable buying into specific ETFs because I'm not buying into one individual company that I do not know will turn around and become profitable again, or that the returns will come back again. When you're invested in the S&P 500, you're investing in 512 companies that have been picked as part of the strongest and greatest companies in the United States. This is the S&P 500 companies, right? It's broken into technology, communications, consumer defensive, financials, healthcare, energy, industrial, utilities, basic materials, and so on. There's hundreds of companies within here that are all affecting the positive and negative, but the majority of them are positive because that's how it works. It's a team effort from some of the best companies in the U.S. So yeah, that is the activity within the portfolio and how we've been kind of changing it. As far as dividends that have came in, we did have Main Street Capital paying out $6.96 in dividends. We had DLR paying out $18.80. So that is what made that $25 and some change that is going to be buying. And also we did add Schwab into the portfolio last week. We had $88.01 hanging around from dividends. So we did target the Schwab ETF. That's that US dividend ETF. And we also adjusted our portfolio by going into edit. We adjusted every individual company in the portfolio down to 1% as our focus. And we put 76% into Schwab as our focus. So anytime any sort of capital of over $25 goes in here, again, it'll just automatically buy Schwab every time it hits that $25 mark. So that is the interesting part of the portfolio and the recent activity. So I really hope my explanation kind of helped. If anybody out there is beginning to invest or has been investing, I have seen a lot of other investors as well. JJ Buckler's, I forgot his other channel, but he's a dividend investor, but he recently changed his method of investing from individual companies over to ETFs. Matt Money, I don't know if Matt Money's his YouTube channel now, but I think if you look up Matt Money, his channel should pop up just the same. There's a lot of other investors out there as well that have just kind of focused. I changed my ETF focus back in maybe 2020. I started buying a lot of the S&P 500 within my Merrill Edge. It just makes it so much easier. So that is our number 3 activity. So jumping into number 4, the dividend tracker. So we did actually update our portfolio as we kind of saw earlier. Our holdings have been updated. So you can see here our value is $46,113.62. That is because Schwab was added to our portfolio. We only bought 1.23 shares, but that is not in our holdings here. So what we're going to do here, if you guys have not checked out trackyourdividends.com, this is a website I'm using completely for free to track my dividends. I just go in here, add a holding, type in SCHD, and what we own 1.2 some shares, right? Let me go ahead and bust out my notepad here. Notepad. That way I can kind of keep track. Again, I had to go back and forth. So Schwab there, I own 1.23159 shares. And my cost base is $71.46. Okay. So pat back over here. And we own 1.23159. And our cost per share is $71.46. We add that gain in there. And now you can see that our portfolio adjusted up. from where it was previously to now match that 46,113, 46,113, and our annual income increased slightly, just slightly. That's because we don't own a lot of Schwab, right? We own 1.23 shares. That only added $2.94 to our annual income. But guess what? We're about to buy another $25 worth of Schwab. And then next week, we'll get paid out more dividends, right? We're entering April. In April, I'm expected to receive about $134 in dividends. So if I go ahead and click on here and view upcoming dividends, I can go ahead and see here in April, hey, Cisco, it's going to pay me nearly $9. Essex Property Trust, $18.20. IIPR, $19.28. JPM, nearly $18. Main Street, another $9. Merck, almost $17. Realty Income, $7. Cisco, $12. WPC, $25. So nearly, $25 there. So our total for the month is going to be $134.25. So that's a really nice chunk to just be reinvested into the portfolio, and that's going to be all targeted towards Schwab. So here in the, whoops, let's not click on that. Well, we can take a look at all of our dividends. So yeah, this includes SPY. Yeah, this is my full dividend income. So in the month of April, SPY is also going to be paying. SPY pays me $634.46 on a quarterly basis, but I don't generally cover the SPY portfolio just because it's over on Merrill Edge. It's not really part of the dividend portfolio, and it's more tracking the S&P 500, but it does pay out a nice hefty dividend, right? So let's go back to the M1. There we go. But yeah, that is the M1 Finance portfolio going forward. And there's nothing else that I'm going to be covering. We already pretty much covered everything that we're going to be covering in today's video. So that is going to be it for the weekly recap. If you guys have any comments or questions for me, let me know down in the comment section below. Otherwise, if you guys are brand new here to the channel, I would really appreciate if you go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video. If you guys have video ideas for the future, let me know down in the comment section below. And we're going to be doing a options video going forward of our options for the year to date, first quarter options 2023. Where are we at right now? So stay tuned for that. That'll be released later on this week. And that is it. Drop me a comment. Okay. Have a good one. Bye-bye.